Hello and welcome to Stock Voyage. I recently researched how you would perform if you bought random stocks and held them for a year. And honestly, the results were underwhelming. The problem was that if 9 out of 10 stocks go to zero, that one stock would have to rise by 891%. And that is honestly extremely unlikely in the stock market. But do you know which assets make these huge moves in a matter of weeks? I mean, you probably know since you clicked on the video. Yes, it's cryptocurrencies. My thesis was simple. There is a lot of shitcoins out there and you can't possibly know which ones are going to explode. You could do a ton of research, but at the end, you still won't be sure. What you could do instead is just buy random shitcoins and hold them for a year. Why could this be profitable? Well, the worst case scenario when buying a shitcoin is that it drops by 99%. But in the best case scenario, it can explode infinitely to the upside. Now hear me out. If you buy 100 random shitcoins and 99 of them go to zero, or in other words, drop by 99%, that last shitcoin would have to go up by 9,801% just to get break even. And in my opinion, that happens quite often in the crypto market. So hypothetically, the more different coins you buy, and let's say all of them except one drop to zero, the higher will that one coin have to rise. So the only thing we can change is the amount of random coins. And the goal of this video is to find that sweet spot. I'm going to be working with yearly returns and see if this strategy is viable in this year. To generate random coins and the yearly returns, I wrote a program in Python. If you want to know how it works, I will leave the link to the video down in the description. Anyway, with this program I was able to generate as many random coins as I wanted, plus it would show me the yearly returns. So just to get started, I generated 10 lists of 10 random coins, and these are the yearly returns. So each number represents the average return of 10 random coins, and as expected the returns vary by quite a lot, from negative 64% all the way up to 39%. We can also see that the majority of the returns are negative, and you only had a 20% chance to be in profit, which was also expected, because if we choose less coins we also have a smaller chance of hitting that one coin that explodes. Next, I generated 10 lists of 25 random crypto coins, and here things get really interesting. This time we have a lot more positive returns. The chances of you being in profit increased to 40%. Is the insanely high return of 137,566%, but at the same time the lowest return was negative 60%. When I generated 50 random coins, only 2 out of 10 lists were negative, meaning your chances of being in profit increased to 80%, while the lowest return was negative 37%, the highest was at 3,521%. When you generate 75 random coins based on this sample, your chances of being in profit increased to 100%. The returns also got more stable. The highest return was at 336% and the lowest at 6%. Next, I generated 100 random coins, and this time I made 20 lists instead of 10, and the chances of being in profit dropped to 85%, with the lowest return at negative 25% and the highest at 34,489%, but the majority of the positive returns lied between 10 and 250%. When I generated 150 random coins, the probability of being in profit dropped to 60%. But even though if you had lower chances of being in profit, the negative returns were substantially higher, with the lowest return at only negative 10%. The majority of positive returns lied between 5 and 100%, and the highest return was at 1,331%. When I generated 200 random coins, the probability of being in profit slightly rose to 90%, with the lowest return at negative 3% and the highest at 17,215%. And this time the majority of returns lied between 40 and 170%. As we can see, the returns get more stable with the higher amount of random coins. The probability of being in profit also increases with the amount of random coins. Let's check out how popular cryptocurrencies moved in the same time frame. Bitcoin fell by 19%, Ethereum rose by 53%, XRP rose by 67%, Dogecoin rose by 110%, and Shiba Inu rose by 117,352%. Shiba Inu is a prime example of that one coin that we are aiming for. So while Bitcoin fell, the rest of these cryptocurrencies rose. Okay, but honestly, in my opinion, the best way to see if we can use this analysis in the future is by looking at the past. So I generated 10 lists of 100 random coins with the returns from March of 2020 to March of 2021. So we just recreated the same scenario, but this time we are analyzing this strategy like we went back 1 year ago. If the generated results are similar to the ones we have already generated, then it's more likely that this strategy could work. So first of all, the probability of being in profit was at 100%, which shouldn't come as a surprise, since in March of 2020 most of cryptocurrencies were at their lows. The highest return was at 2,334% and the lowest at 215%, which is a really good sign. The fun part about this strategy is that you don't even have to invest insane amounts of money. You can hypothetically invest $100 into 100 random coins, meaning you buy $1 worth of each coin and you hold it for a year. In the hypothetically worst case scenario, every crypto goes to zero and you lose everything, which is extremely unlikely, but it could still happen. From all the data I've collected, the worst case scenario means you lose $64. And here things get really interesting. Hypothetical upside is infinite. From all the data I've collected, the best case scenario would make you $137,566, which is a good trade-off between losing $64 and winning $137,566. But of course, what happened in the past doesn't mean will happen in the future. I also have to point out that we've had a lot of hype around cryptocurrencies in the past 2 years. So the one question we have to ask ourselves is, will the hype stay? Since NFTs came into light, they have in my opinion taken some of that spotlight away from cryptocurrencies. So just keep this in mind. And this is not a financial advice, and it's for entertainment purposes only. It took me a long time to make this video. So if you enjoyed, smash that subscribe button as it will help me out a lot. And here is a video that YouTube algorithm thinks you will like a lot. And thanks for watching.